Welcome viewers. On behalf of Iravati Research and Communication Center or IRCC, this is your host Pratim Ranjan Bose. I have with me Mr. Subhendu Moitra, a veteran investment banker and director of Coeus Advisors. Together, we will discuss some of the latest trends in Indian economy that have been growing at a very fast pace. Mr. Moitra, to start with, the first thing first, what is your takeaway from Mr. Modi's US visit? To what extent it would boost the growth momentum, particularly Make in India agenda? And just by the way, Fitch Ratings have just upgraded their growth projection for FY24. Over to you.
Yeah, actually, thanks, Mr. Bose. Actually, what I find, this is what I think we discussed some time back also in our earlier discussion, that there's a huge, attraction for India internationally, and this Mr. Modi's visit here shows that. If you have seen, while there are three very major investments, Micron, this G jet engine, and thirdly, Tesla. Look at Tesla. A year back, they were saying they're not interested.
Tesla promised to come. It is
Exactly,
not a
but
farm deal.
year back they were saying they're not interested, and then it's not so focused on India. If you have seen, they have said that we're looking for various other centers, including India, for that. And today he's saying that he's interested. I mean, that's a major development as such. As we can see, a couple of things as such. Considering the geopolitical situation in the country, India is the most acceptable to all the areas or the zones of this world. So it's the best place for any export business or export oriented business, and also the domestic demand on this country is so high. So that is one positive part of it, and that's what all these people are coming here. And as we discussed earlier, that even the Europeans, various machinery manufacturers, they want to come to country. I mean, of course, this is not a part of the US visit, but I'm sure far more US companies will be interested in coming to India, which will boost
Ultimately,
our
it all boils down to that simple thing of FDI and growth in India. So whether it is coming
FDI
from
growth
US
in
or
India.
Europe, doesn't
Yeah,
matter.
ultimately it's a FDI growth in India, employment in India, which is our large country needs in a big way. Growth,
Absolutely.
employment, export, and of course that improves our foreign currency situation, our balance of payment situation, all these things. So these are the huge benefit for this country, and we are going. I think the pace at which we are moving into that area is enormous. This is what I can tell you, and that's the indication. This particular Prime Minister's visit to US is a very clear indications of that.
Normally, normally the world follows a trend. So when Apple comes in, it is said that the rest of the American companies follow. And if the Apple and the Tesla comes in, that creates a case. And if G starts making jet engines by
Yeah,
converting India into the fifth engine maker in the world,
in the world, yes.
yeah, so that should translate. These are the big names, but the economy doesn't grow on big names. There should be cascading effect down under, and that is where
So
probably
once these manufacturers, whatever names you get, there's a huge ancillary will come with that. Look at a car or a engine of a jet. There's a huge ancillary business which comes with that. So this is one part of it. We are less looking at the one investment. That's not all. The investment is much more than that. The employment is much more than that. So we are just looking into one of the units. It's not so that the ancillaries are huge, especially for this kind of industries. And that is what we should look at. For even if I produce chips here, we can use the chips here much effectively in our say white goods or other businesses or wherever business, any other businesses now the chips. So that's very important. So we should not less look at this investment. Look at the types of investment is coming. See, if there's a real estate coming, that's a different picture altogether, But
right.
of course, there is also an ancillary effect. But these things coming has a absolutely different connotations as far as the economic development or the growth is
Multiplier
concerned.
effect.
A huge multiplier effect, which we
And
should all appreciate.
and the multiplier is not probably not merely economy. Isn't it a major sentiment boost? Ultimately, the world runs on sentiment.
Absolutely, absolutely. I think that gives in giving being indication is coming in the share market to some extent. World actually works on that particular as you said the sentiment, and so one these large ones coming to country gives also the boost for overall image of India and overall it was always there, but now people have realized that if everybody going, I cannot be left behind. So that including the investors, including the the secondary market investors internationally, FIIs. So that actually moves, and I'm sure, as you said, the rating has shown they'll revise it. I believe that even now, I believe whatever India's rating is, that's not right. If you compare with some of this AAA, AA internationally, you will amazed to see that how you can make it triple B plus. I mean, that's very, very interesting as such. But I am sure now with all these indications coming, whatever the skepticism was there in the
Which
rating, that will
ratings are, of
appear.
course, on the growth outlook, but you are talking about the sovereign rating. And yes,
Absolutely, sovereign rating.
India has
Yes.
argued that its sovereign rating should improve.
Absolutely, it's improved, and I think right now rating which is being shown is not at all comparable with whatever you have. You just look at whether the countries there, how they have rated the European countries, and some of the countries there,
Well,
and how they're
in this world, there are many anomalies. Some people have put Afghanistan ahead of India in democracy ranking,
absolutely.
and
So
Hong
I'm
Kong ahead.
sure.
First, they put Hong Kong ahead of India. Now they put
Yeah,
Afghanistan ahead of India.
Afghanistan.
So,
So but
anyway,
I believe rating agencies are more knowledgeable or supposed to be unbiased because they don't have other agendas. And now I am sure they may learn that there is something they missed, and they need, if others are seeing that they have not seen it, I'm sure they will see it in the near future. And I believe the sovereign rating is going to get a boost, which is a more other improvements also in our economy, such how do you raise the money internationally and all ratings, prices and other things, which
it
will
will
also help
probably
us.
pave way for better access to finances.
Absolutely, better access to finance and also the investment. Though actually, it's not a that investment, but when I go out, I get a razor lower rated paper. That also attracts a lot of investors internationally because our
Just
cost come
asking
down.
here, just asking here. Suppose an American investor is investing in whatever in India in FDI, and he is raising finance in America or Europe, wherever he is. And
Yeah,
given India's sovereign rating, does his cost of finance increase because
always
of
goes up.
India's sovereign rating?
Yeah, actually, it goes up unless he takes on his own books. Because normally, what happens is international guys they take in their own book. They hardly take showing Indian books so far because India's rating was so low. See, if I am a rated double A in my country is rated double A. Rather, I should take the benefit of that instead of saying that I am taking on the strength of a investment in a triple B countries because that's the reason I'm saying that's one advantage. I can give you a small example. If you see this Noida airport, okay,
Hmm.
Noida airport has been funded by Zurich, Noida. It's this Noida new airport which is coming up, second Delhi airport, is by the
Right.
Zurich International Airport. Now Zurich International Airport is an international double A rated. Now look at
Okay.
the international double A rated. They are raising money in India. Though we gave a rupee loan, but we gave a lot of benefits and they gave a guarantee. So when they gave guarantee, we also gave a much farther because actually that's more than the sovereign. It becomes rating. So it has its advantages. Everybody raises money much cheaper, and naturally, they can maybe raise money on India balance sheet only instead of raising money on their own balance sheet internationally. So it has its advantage as such always,
Right.
and risk comes down. The overall risk profile comes down in this country right now. This risk profile is taken is very high. If you see internationally for whatever reason, because our rating and other things. So I am sure with this sentiment which you said, the risk profile slowly comes down and your requirement of the margin goes down as such. So that has a
I
helping
have a feeling. I have a feeling. See, nothing. Sentiment is a big thing, and sentiment moves with economics. Okay,
yeah.
and that is what is politics probably. So
Yes.
I have a feeling that if in the next election, this government comes back with equally thumping majority, a lot of these things, ratings will keep changing. We will see certain things over there probably.
Actually, international guys always look for a continuity with the policy. So any continuity helps them as such. So that they know the focus as such. Though I would say that US and all, they have stabilized such extent, it doesn't matter to them whoever is in power. But in our country, we have so much stories still today of the different policies getting changed with the change in government. So there is always a uncertainty on that factor. So always any particular government continuing for a longer time, or the stability, or the that
Policy
increases the
consistency comes in.
policy consistency. Actually, that increases again the sentiment, improve the sentiment internationally for the country. There's no doubt about it.
Right. Just a small question or point in this regard. When say these apples, I think the primary reason for these people to invest in India is not to look at export as a priority, but to look at the Indian market, the vast market. Now, here comes a question. Here comes a question. In the past, when the auto investment took place, there was an argument that India is not as big, it doesn't have as big a consumer base as was perceived. Right. But of late, you must have noticed that the smaller, India was known for a country of small vehicles, but of late, it is the larger vehicles that is selling more than the smaller vehicles.
SUVs, MEVs, and all. Yeah.
I mean, bigger size vehicles.
Yeah, always.
I mean, to give just to
premium ones. Premium ones,
I mean, from the mid-sized ones, say, for example, earlier people used to buy, say, all of us started with a Maruti 800 or Alto or kind of stuff, Santro. But now you will see that people are first purchases are maybe in the range of Swift or parallel i10, i20 range of cars. So, but back to the point is that when this Apple stores, by the way, in the first month, they clocked a combined turnover to Apple stores is in the range of 45 crore. Okay, that is big. So we have to look how it goes. But what is your, just briefly, none of us are discussing taking economic numbers, but both of us do have some touch with the ground realities. So what is your, what do you expect, say, for example, Tesla cars or iPhone 14s, how do you see their domestic market potential?
See, having said that, yes, India has a large consumer base, but mostly for a lower grade of a lower starting point of the consumer, because our overall per capita income is not reached that level. Overall, I mean, maybe our economy size has gone up, but overall per capita we are still not in the developed level, countries level stage. But having said that, there is a huge population because we have a large population. So even if you take the segment who looks for the premium ones, that's also huge. So basically, even for a Apple or for a Tesla, it's like having that market itself is a say full of Europe, or say even US. It's a 50 crores people as such, and I have here 130 140 crores of the people. So even if I am able to get say 20-30% of them in that particular category, which is already I think we have more or less reached, then that itself it serves their purpose.
And so of course, if we can ensure the growth momentum for say 10 years or so, that will take our per capita GDP far higher than where we are now.
So there is a
next door Bangladesh in 2008, its per capita was in the range of 6,660. Now it is in the range of 2,500, 2,400.
Right.
So such increases are possible. Right.
Such increases possible, and I think India's projection to go to developing countries, I think another 10 years, in that level. The way that we are growing and our economy is going.
The official goal is to be a developed country in 2047.
Yes, so I mean that's okay, but I think the way we are growing, official goal of 5 trillion was also farther than we are reaching earlier. So I think I'm sure we should be reaching this thing by say 35, 30, or maximum by 40, that level. But having said that, even with current situation, the kind of segment who can afford that itself is too large. So it serves their purpose. Okay,
right.
It's a big market, so that way serves the purpose.
Now there is a growth. We have to ensure the growth momentum. It must consolidate. It is still, I think both of us will agree, it is still in its early stages. It is yet to pick up into, it is yet to be a boom. The one crucial factor is, of course, election, which is due. in 2024 March. But another big factor, and in the case of India, that had always been a big factor, is access to finance. And on top of that, the increase in policy rates had now, reached a level. So RBI has paused the rate hikes. So is US Fed, by the way. What is your expectation? How long should we expect the rates to remain stable? And since when? That is the big question. Can we expect in this fiscal itself the rates to start climbing down?
See, I think the rates will continue to be stable. And but climbing down, I don't think this current fiscal there is a chance of climbing down, to be precise. It will be stable, and we should live with this rate because of the international scenarios, international positions at this moment. Today, also, if you have seen, the UK, their treasury has increased rate by 50 bips. So given that, I don't think there's any further chance of reduction this year. And even if you have seen, some meeting report has come of the RBI's last policy discussion. There was some discussion on that whether they should pause or not. So there is still apprehension in our mind, but still I believe the way things are going, I don't see there is an increase in the rate in still the end of years. But a rate coming down, I don't think so. I don't believe that.
One problem factor is that this is an election year. Normally in the election year, there is an inflationary pressure.
Exactly. That's one. Secondly, even otherwise also.
And on top of that, I mean, this is happening in a situation when the world economy is far from stable.
Absolutely.
We just don't know who is.
Yes.
I mean, already
I think
two developed countries have already entered in officially in recession phase, Germany and New Zealand.
And very large countries, I mean, large economies as such. So given that, I think we should not look for that. In fact, I spoke to recently some of the bankers, senior bankers in the country. They also believe in that angle, that we have to live with this rate at least till the end of this year.
Okay. Now, the last part, we are looking forward to a manufacturing growth. We haven't seen really, except the auto boom, and then some power during the between 2007 and 2000, for some years during the UPA rule, the power capacity had gone up substantially, which of course the momentum was maintained also under this government. It was not earlier, it was thermal capacity. Now later on it became the renewable capacity. So we have seen huge investment in that area, but otherwise the manufacturing side suffered. And finally, we are seeing some green shoots there. I was talking to the SME segment in Kolkata. They are mostly into metals and fabrications, etc., forging, casting, and they have received a record order.
Yes,
this fiscal.
Absolutely.
Each of them are having 2 times, 3 times order book position. And I would also like to confirm from you, parallelly there has been a trend in that some large companies are acquiring small scale companies which were financially distressed.
Yeah.
Now, if I put this together, there is an interesting story. I mean, I'm just asking for your feedback. Do you think, for any manufacturing growth, even for services, you need the smaller fellows your vendors to grow. They have to participate in this growth. They have to deliver. But what I was finding with the SME segment in Kolkata is that many of them are now afraid that they cannot fulfill the orders. So, they have started giving exorbitantly higher rates so that the buyer goes out. These are big buyers, so they don't want to be blacklisted. Do you think that the SME segment is in a position, and the primary problem they say that they can, of course, they were looking forward to this, they can, of course, deliver the orders, but they need finance. Where from they will get so much of finance? What is your take on this? Can we really get into a manufacturing sector growth without the SMEs? Or how to ensure capacity building at the SME side?
Actually, it's a very important part of it because SMEs are the suppliers. So even if you go with a huge growth, if your supply chain doesn't work properly, then ultimately there'll be imports. So we lose as a country. So given that, we need to boost
The
them.
job
But they have a
opportunity
very
will go.
yes. So there's a huge job opportunity in SME. So that's, I think, huge employment opportunity. The problem there is, what I find is that really they have an issue of this finance because of the collaterals. There's a collateral-based finance which they cannot afford. They are very small guys. They don't have collaterals, and bankers or the lenders are
No,
not.
even if they have collaterals, the problem is when you are asking for 100% collateral.
You cannot give that.
So suppose you are working in one shift, suddenly you want to increase to 3 shifts, right?
Yes. So you
So
have to
suppose 3x working capital need. So you need 3x of supporting assets. Now where from you will get 3x assets?
will not have it. So that is, unfortunately, government has come with various policies and various schemes also. There is but I think there has to be direct lending. Has to be, government policies are all coming for, in the form of refinancing through SIDBI. This is one of the schemes. SIDBI hardly does any direct funding. They do refinancing. But then again, it depends on the final lenders to take the credit risk. That's one. Then SIDBI, of course, has come with a credit guarantee scheme, but it needs much more wider, much more larger, pie as such, because the demand is so high. So that scheme is also not sufficient. I think we should look into that part of it. And I am with this SSI people's, which is very, very genuine. That they have to give 100% collateral, which is not possible to be given. So they are not able to grow the way they need to grow in the current situation when the market has grown so high. And we need to look into it. And we need to come with a scheme of direct lending to them, the way in other countries like developed countries, they have those kind of schemes. We need to support them so that this can be done. Or we have to come with a specific institution, or we need to strengthen SIDBI to direct lend to them instead of just doing the refinancing. Refinancing is again,
Refinancing is again adding layers. Number one.
Adding layers, and secondly, their book may look very large, but ultimately it may not. Ultimately, it may not help this.
The last person who is actually lending is again asking for the collateral.
Yeah, which is the way NABARD is helping the farmers. SIDBI or some institutions to do directly funding as such.
Yeah, NABARD has come out, has a subsidiary which is Napkishan. So
yes,
they are into direct lending to the farmer producer organizations. The government has created a 1,000 crore credit guarantee fund there.
Right.
So how big is the SIDBI
Here
fund?
also credit guarantee fund is there.
How big is that fund? Any idea?
I'm not, but I understand it's also quite a large fund. But the look at that if as compared to the farmers' demand, this SSI demand is much more.
Much more.
See that
you have 54 lakh SSIs in the country.
And look at their credit requirement is much more. Farmer requirement is not that much. It's a working capital. Here's the working capital, but it's much more.
FPO, the total FPO volume, is I don't know what is there in the country at this moment. It was in the range of around 5,000.
Absolutely.
And where is 54,000? 54 lakh SSI units. So without each large unit has a number of SSI vendors, and every SSI vendor has even micro vendor. So it is a huge problem.
54 lakh, if you have 1 crore each, it's a 54 lakh crore, right?
Right.
So that's the amount we are talking about. So we need to have the commensurate kind of support system. I don't think that SIDBI scheme is that big. And again, it depends finally on the banks to do it, deliver it. So there has to be direct lending by various. There are even private guys also doing, but it has to be supported by the government. I think otherwise we'll be losing the opportunity, because there's a requirement of the employment in this country, and where SSIs play a big role.
Yeah, that is the biggest story, is that there is a growth, no doubt about it. Now we can see that on the ground in terms of the sudden doubling or tripling of orders at the SME level. But they cannot sustain it for more than a year or two. There are many other issues. I'm not.
They have to deliver. That delivery will be an issue in near future.
Their capacity is almost booked.
I know.
They cannot go beyond that.
Absolutely.
The unfortunate story is they were looking for this opportunity for so long.
Yeah.
Now, when the opportunity came, it came in a huge, as a
Such a
flood.
size.
All they
Yes.
need is the money, which no one is giving them. And ultimately, what the government will do is at the pressure of the large, they will open
They
the
will
floodgates to
import.
imports, and that will kill the entire job prospect. So
Yes, yes,
once
absolutely.
again, we might head for another jobless growth.
Right. Right. I agree. I absolutely agree with you. So we should do something on that, on the funding part of it. I absolutely agree with you.
Thank you very much.